Hey everyone, I hope you're all doing well. I just wanted to make this video today as a case study for Euro US dollar. Now we're going to be going over the moves that happened, Thursday and Friday, and going over some of the things that I posted in the Discord community as well, because what occurred in price action is very interesting, and I think it has a lot of good, valuable lessons within it. So let's dive in. So let me switch over to the Discord community. I forget what day this was, but it was early on in the week that just passed. Now I mentioned that I was targeting the higher time frame supply zone, which was a 4-hour supply zone to the left. You can't see it in this picture, but that's the zone that I was targeting for a pretty massive short position, right? I did explain how on the 15-minute time frame as well, long positions would certainly be valid. We had a break of structure. Now from this point on, I think we traded a bit lower, tapped into demand once again, and then shot up towards supply. But yeah, these dotted arrows that I had plotted out here, that did end up taking place overall. Liquidity was cleared from the downside right here. Those lows were taken out. Price tapped into 4-hour demand right around here, giving price enough fuel after a consolidation to move higher into the supply zone, okay? So I plotted that out and shared it in the analysis section of the Discord pretty early on in the week. I provided an update as well, just showing how much consolidation was going on here. Again, just iterating that we should be patient in the market. During a consolidation like that, there's no need to be entering on 1-minute time frame and just psyching yourself out for losses here and there, losing sight of the overall picture. And you know what? One of the things that has helped me keep a good hold on the overall picture is actually doing this split screen. I never used to do it, but lately I've just been keeping the higher time frame, either the 4-hour or the 1-hour, on the chart at all times, while monitoring lower time frame as well, such as the 15-minute. So the 4-hour and the 15-minute are a really good combination, and that's what I was utilizing for most of the past couple weeks actually. So again, as we can see, price eventually broke out of this consolidation. It left some liquidity behind, right? We had equal lows there, or relative equal lows. But you can see that this demand zone was well respected, consolidated for a considerable amount of time, just gathering orders, gathering momentum in the market. And then once there was enough volume, gathering enough volume in the market. Once there was enough volume, momentum kicked in, broke to the upside, clearing this liquidity here, right? All that's cleared out. And you can see how liquidity plays a strong part in the market here, right? Because as soon as we had this breakout, you're going to have a lot of buyers entering the market. And of course, we can see in hindsight now, the price just dropped off and melted from that higher time frame supply. So if you didn't have a strong understanding of supply and demand, you maybe wouldn't have this zone mapped out at all. And you'd be looking at this as a break of structure, right? You'd be looking at this move as just a simple break in structure, and you'd be looking to target maybe this candle as your demand zone or your order block to then trade higher from there. And obviously once price came back down to that order block around here, you would have just been stopped out instantly. So it's very important to have a keen understanding of supply and demand levels. Now, again, this supply level, let me take it back to where it originated from. Right, it was this little candle here. Well, not so little because we're on the 4-hour time frame, remember? But that was the last point in supply before this huge drop off in price. Yes, we got close quite a few times, making the imbalance more efficient, right? We cleared the imbalance here, but we never made it quite back up to those that supply level there, right? And so we had a lot of bearish momentum as well, but demand stayed in control until price was able to mitigate this supply zone. And once it was mitigated, just dropped off completely, eventually actually invalidating this demand zone, okay? So there's quite a bit to go over here. Now, if you wanted to stick to higher time frames, you could honestly have just taken a risk entry here from the equilibrium of the supply. This still would have been a fantastic position. You probably could have gotten away with 10 pips as a stop loss, targeted the the beginning of that demand zone for just over 8% profit, or even the EQ for almost 10% profit. And of course, depending on how you manage your trades, if you just wanted to trail your stop loss, you could have made it out with, somewhere around 13%. So just huge potential here. And basically the point of this video is I want to get into this example specifically because it's a great example of how you can utilize even just two time frames like this, right? Like the 4-hour time frame and the 15-minute time frame. You can utilize just those time frames if you're not comfortable with lower time frames such as the 5-minute and the 1-minute. Because in this scenario, it wouldn't have even been necessary to drop to the lower time frames. So I want to go over that. And just to preface, the last few weeks, I've been incredibly busy just with a lot of stuff in my personal life. I haven't been on the charts as much as I'd like to be, which is another reason why this is such a good example, because these were the only two time frames that I was looking at. I actually never dropped down to the 5-minute or the 1-minute. And this scenario just played out perfectly. This is exactly the move that I was looking for at the beginning of the week when I first shared my analysis on it back here. This is the exact huge drop that I was looking for. And I wasn't anticipating demand to hold at all. I wanted price to mitigate this supply zone and then just melt off from there. The overall target would be recent lows, right? Which we've almost reached already. We're just a short ways away from there. But price most likely does need to rally up higher for sure. So let me get into this. I'm just going to use the replay tool here. Go back to there. So again, this is the 4-hour supply zone. There's nothing else to really look at here. So I'm just going to go full screen on the 15-minute time frame. So as soon as we've entered the higher time frame supply zone here, we can see we had a huge consolidation. And it's easy to get lost in that consolidation, right? But the main thing you have to focus on is where is your high and your low, right? The most recent highest high is right here. The most recent higher low is right here, okay? So those are the 2 points in structure that we need to pay attention to. If price were to break through the high point here, then this supply zone would be invalidated at that point. It would be mitigated, and clearly demand would be still continuing to maintain control. And if price were to do the opposite and break to the downside and violate this structure here, then we would have to start looking for selling opportunities, because that would show us that supply is still in control, supply is taking control, and it's a good time to look for shorts, right? So rather than rushing into a trade and just going short on the market anywhere within here, why not just be focused on the macro instead of the micro and say, okay, if I'm looking for shorts, I need to see how price reacts to this structure, okay? Once we get into that vicinity of structure, is price going to do this? Or is price going to go right through, come back up to mitigate the last point of supply, and then drop off from there, okay? So that's what I was waiting to see. I wanted to see this structure either be respected or violated. Now, it's important to not rush into a trade just based on your bias. You need to actually look for confirmation, and this was my confirmation. This is the structure that I wanted to see violated in order to confirm my short bias. So let me play price forward. So as you can see, we're kind of topping out there, creating a lot of liquidity here as well, but that's not really the focus right now. We want to see how price reacts to that structure. Consolidating, and right there. Okay, so this could be looked at in a couple different ways. Technically, it is a break of structure, right? This was our most recent structural low, and we clearly broke that structure, okay? It could also be classified as a flip zone, because this would be more clear on a lower time frame, such as the 5-minute or the 1-minute, but within this wick, we would have a lot more action. But this wick was a demand zone, right? And as soon as price violated it, it turns into the last point of supply, okay? So that's a flip from demand to supply. Now in this scenario, I would just highlight the entire consolidation zone, right? This whole zone right here before the break happened. That would be the last point of supply, okay? Now, these candles here, they're very, very small and insignificant. If you really wanted to target the absolute last point of low momentum supply, you could do that. But that is so micro. There's just no point in doing that, to be honest. Like, if you just target the, like, there's no reason to be greedy is what I'm saying. If you target the entire zone here from wick to wick, how many pips is that zone? Let's just measure that. Right, so the whole zone is only 4.5 pips. So like, do you really want to get more micro than that and risk missing the opportunity altogether? For me personally, absolutely not. 4.5 pips for the whole zone is perfectly fine, especially considering I usually target the EQ. So let's do this a little bit differently. Let's delete the supply zone, break out the fib tool, again, wick to wick, and you could literally right there set a position for the EQ, the equilibrium of the zone. Stop loss just above. I'd want to cover that little wick there too, so we could say 4 pips. Okay. And then even if we just target the beginning of the higher time frame demand zone, that's just under 20%. Okay, so massive, massive potential. And honestly, this is all the confirmation that I would need. I wouldn't be looking for a double break of structure because I'm just so confident in the analysis. And part of being confident in my analysis is due to the fact that I am also anchored to this higher time frame, right? The 4-hour time frame here is my anchor, right? So I know the overall bias. I know that price is reacting to higher time frame supply, which it needed to due to the huge move that the supply caused here. We left a lot of unmitigated business around here. Price made its way back. Once that supply level was tapped into, you know, you see these indecisional candles following it. If it was really an insignificant level, then more than likely this price action would have continued and just immediately violated it, right? But the fact that we stalled out here, you know, momentum started to fizzle away. It's a clear sign that you should drop to a lower time frame and really monitor what price is doing. So again, just to reiterate, just because we are having that reaction at the higher time frame supply, that prompts me to go to a lower time frame and start saying to myself, okay, where is the most recent structure? That was here, of course. I need to see that structure violated or respected. Now, as soon as I saw it violated, it's a break of structure and a supply and demand flip zone, okay? So it's a very strong area to trade from. So I would immediately highlight this zone and set a limit order at that point in time. Now, again, you could drop down to the 5-minute or 1-minute time frame, but it's not always necessary, especially if you're, 1, not comfortable with lower time frames, or 2, you're very busy like myself these past couple weeks and just simply don't have the time to monitor the little micro price movements, right? To me, I would rather be in a trade rather than just viciously trying to lower my stop loss to like 1 or 2 pips. I don't care as much about that. I would prefer to just be in the trade at like a 4 or 5 pip stop loss. That's fine with me, especially in the overall picture of things. If our analysis is correct and price is to make its way down to the higher time frame demand zone, or as we can see here, past the higher time frame demand zone, then we still walk away with 20% profit, right? That is insane. You could literally stop trading for the rest of the month. Just take this one trade, stop trading for the rest of the month, and be miles ahead of 95% of the traders out there, right? So it only takes one of these a month. That's why I'm so selective with my trading. If you just snag one of these kinds of trades, and they're available almost every day in the market, but if you just snag one of them, that's your entire month basically, and you can take a break if you want, or keep going, completely up to you, right? Now, full disclosure, I was not able to take this trade because you know, right around here, it's like 1 in the morning for me. Yeah, like 2, 3 in the morning. I was obviously sleeping. Okay, I go to sleep around 11 o'clock or so. So yeah, like I said, full disclosure, I was not able to get in on this, but the reason I wanted to develop a case study on it is because I posted all about this throughout the week. This is the move that I was waiting for. And I did post in the Discord here, you know, the move I was anticipating all week happened while I was sleeping. Can't be mad, nothing I can do about it. Blah, blah, blah. It is what it is. I even posted this as soon as the move started happening, right? So there's the flip zone or break of structure, kind of the same thing in this scenario, but it is valid for both. I highlighted this zone as well. And as we can see, if we just target the EQ of the whole zone, rather than getting too refined to an exact candle, in this scenario, the consolidation zone is so tight that you might as well just target the whole zone. Let's play price forward and see what happens. Right, so right there, you tagged into the trade. Yeah, technically this was a break of structure. We broke that low, but look at how it broke, okay? This full body candle barely broke below it, and then that was followed by this indecision candle, okay? So what is that telling you? It's telling you that that isn't much of a valid break, is it? Like technically, yes, it's past that level, but with what momentum, right? The momentum is non-existent here because we left this zone unmitigated, right? So price is going to be drawn towards that zone to mitigate it before taking off. But now that's of course occurred. We've been tagged in, and this really shows you the power too of targeting the EQ. Just beautifully tagged in, basically zero drawdown. Now let's see how it develops. Let me just full screen this. So, I mean, you guys have seen the price action by now. Like, you know that this basically just melts to the downside. But it's just a really fascinating trade because of how clean it was, right? Like, this is just such clean price action. It really showcases the potential of just simply understanding these higher time frame supply and demand zones. Now, again, even if you just targeted the beginning of the zone, you're looking at just shy of 20% profit, right? But we know by looking at the 4-hour time frame, price actually went well beyond that zone. So if you were utilizing the management techniques that I've gone over in previous videos and course videos as well, and if you simply just trailed your stop loss above structural highs, right? Whenever there's a break in structure, like right here, you can move your stop loss to just above that high because theoretically price should not violate that high. So like I said, you could move your stop loss here. You know, we had another low, another high, another break in structure, right? We broke that low. So at that point you could have moved your stop loss just above that high, right? So you could have been trailing your stop loss this entire time. And of course, price keeps going and going. You know, we have another low. Of course, this would be more visible on a lower time frame. But we have another high here as well. You can place your stop loss just here. So this trade could have continued running. And you can see that once we got this refined entry, if we were targeting a lower point in price or even just simply trailing the stop loss, like I said, you know, now we're sitting around 25, 26% with an absolute bottom of just about 27.5%. So you can just see here the numbers are absolutely mad, like just insane. And it was simply based on an understanding of the higher time frame supply and demand structures, okay? As I stated in the Discord in my analysis, my priority was this higher time frame 4-hour supply zone, right? Anything that was happening prior to this zone being mitigated, yes, demand was in control, but look at the momentum, right? We have this crazy momentum right here to the downside, right? Look how quickly price made it to this level here. And then look how long it took to get back to that level. Do you see what I'm trying to say? So momentum was clearly to the downside. If we looked at higher time frames, even like the daily and the weekly, or even just stuck to the 4-hour, to be honest, we still have clear bearish order flow, right? Order flow is clearly to the downside. So this whole point of price action here, this was simply a consolidation on a higher time frame. Of course, on the 15-minute, the 5-minute, the 1-minute, this is going to be a huge bullish trend. But if you just keep in mind the bigger picture of things, sticking to the higher time frames, you can clearly see that this entire zone here is a consolidation. And it's a consolidation with the intent to mitigate this supply zone, because that was the last point of supply before price completely took off in an inefficient manner. It has to be corrected at some point, right? So that, again, this consolidation had the intent to move higher in price to mitigate this supply zone. Once that supply zone is mitigated, price has everything it needs to free fall, okay? If bearish order flow is to continue, price has all the fuel it needs now to absolutely free fall. And that's exactly what happened. So I'm still looking for this low to be taken out. That is the overall target. That was part of the analysis here too, right? The overall target was, well, I guess I didn't mark it out with a ray line, but I did bring the arrow all the way down there. I didn't anticipate this being a very big move. Those were the lows that I'd be targeting, okay? And we're right about there. Price is rallying higher, more than likely going to trade higher to mitigate some sort of lower time frame supply zone. Right, so even if we just stick to the 5-minute time frame, this is the most recent supply zone. Oh, I'm still on the replay tool. Okay, let's see. Let's just turn the replay off. It's not necessary anymore. Okay, so we do have unmitigated supply here. Unmitigated supply here. Right, so at either one of these levels, to be honest, more than likely this one will probably be just used as inducement, considering all the imbalance we left right here. So price will most likely mess around a bit here, trigger in sellers, right? Induce sellers early, just to kick them out, triggering their stop losses, mitigate this supply, and then drop from there. Ultimately towards this low. Now what happens at that low is up for debate. If bearish order flow is to continue though, right? If we're paying attention to the higher time frame and bearish order flow is to continue, then price should invalidate this low, come back up, retest and mitigate supply, and then continue free falling from there until we reach a demand zone that is significant enough to hold, okay? So basically the point of this entire case study here is, one, to focus on higher time frame supply and demand zones, because once you grasp the concepts of them, it's very powerful. As you can see, I literally played this out for everybody, like plotted this out for everybody in the Discord before anything happened. This wasn't replay tool. This was literally at the beginning of the week before any of this occurred. It's just simply using a higher time frame bias combined with lower time frame price action and structure, okay? As soon as structure was broken, that shows clear bearish intent and that supply is in control, right? This zone was validated. Supply is in control. We saw the intent, target the last point of supply, price free falled from that point on, okay? And again, depending on where you got in and where you targeted, you could have walked away with just shy of 30% profit. So absolutely insane potential. Wish I was awake at 3 in the morning to take advantage of this, because as soon as I woke up, I was like, oh my God, that would have been the perfect place to enter from. But that's okay. These moves happen at any point in time during the day. New York session is really good as well. It's not always London session. So yeah, it's all about being patient, because like I said, even just grabbing one of these trades per month, you're sitting on a gold mine, an absolute gold mine, okay? So it's all about patience, and this is why I'm very selective with my trades, because you don't need to trade every single day. Like I said, I plotted this out at the beginning of the week, and it didn't take place until like Thursday, Friday. So it really is all about patience. And I still managed to walk away with 5% profit this week. I took one loss, I took one win. It was a 6% win, but then I took a 1% loss. So I'm still netting 5% for the week. If you think about it, on a $100,000 account, that's $5,000. On a $200,000 account, that's $10,000. We're talking in a week. So, you know, I'm not even mad about missing this, but obviously this would have been an insane trade as well. So again, I hope you guys gained value from this video. Just going over the basic concepts of what we look for in this strategy. As you can see, it's actually very simple. Don't let anybody make it seem complicated to you, because it's really, truly not. At its core, it's just basic supply and demand, which can be found in every single market, in every single economy in the world. It's all about supply and demand. Once you grasp these concepts, you'll look at the market in a very different way. All right, so again, I hope you guys enjoyed this video, and talk to you guys soon.